Hi, good morning. I hope you are well. I wanted to give everyone an update in regards to the stock market. If you haven't viewed my other video, please do so. I go a little bit more into the technicals and how I look at things on my first week of March update. So please check out that other video. I think it should give you additional insight to what I'm about to present today. But let's just look at the charts. So what we're looking at again is we're looking at the S&P 500 and we're looking at the weekly. Again, the reason why I look at this is because, you know, it gives a sort of a how would you say it, like a pulse around the market, right? Because it's composed of 500 companies, so we're not just looking at one company like Tesla or Amazon and sort of getting the pulse from just one stock or two stock. We're getting the pulse from about 500 companies. So I like to look at the S&P, and it kind of gives us a roundabout of what we're looking at. I do want to go briefly over some technicals. So what you're looking at right here is this red line, which is 9-day exponential moving average, which basically after every 9-day period, it's just the average of how we've been trending. Same thing goes for the 21-day, just the average. And then down here is what you start to see is it's called the relative strength index. Basically, really the best times to buy are usually around this 30 mark, and then most people sell around the 70 mark. Okay. So with that said, what you're looking at, if you're looking at the dates, you can see that we definitely had that dip down there last March. And then ever since then, once we kind of went and and this was around that COVID dump. So once we had that COVID dumps, I mean, we recovered fairly quickly. And actually, we've been just right above this 9-day, and then we would go down and we would just touch it, and then if we would go down there, it's okay, because we would find support at this 21-day, and then we would come back up, and then boom, we would go back down, hit the 21-day, have a full green bar, and then we would just ride along this red line here right above it. And so the movie that I or the movie the YouTube that I presented on the last video was, this was also the first time where we started to see a downtrend. And then all of a sudden that Friday, that next week, that Friday, we closed, and this candle meant it was an indecisive candle. We don't know if we were going to go down more or if we are going to go up. And if you look at the last video I sent, I said the only way to recover this is we need a full green bar. And what did we get? We did get a full green bar. And I would actually expect some weeks where we, probably this week and next week, where we will have some green. Now, where we wouldn't have some green is some things that I wanted to kind of share with you guys. And what I mean and what I'm trying to do here is, I'm not trying to scare people. I think that you know, I think I'd rather, what I'm trying to do is I'm trying to prepare people. And Basically, I mean, if you have money in, like in a 401k or in, oh, and another thing, sorry, this is not financial advice, and I am not a financial advisor. So this is for educational purposes. But look, if you're like in a 401k or IRA or something like that, then these aren't things you really need to worry about. You're going to have ups and downs in the market. Um, and you know, this is just something, this is really focused toward the people who are probably in the day to day trying to learn, being investors, kind of trade. Um, I will say though that, if depending on your age group, if you are a little older, and what I mean by older is like 60s and 70s, and then it wouldn't hurt to also start, and again, talk to your financial advisor, but it actually wouldn't hurt to start shifting your allocations toward more of a conservative route. Short, long-term bonds and things like that. But if you're young, then you're going to go through these dips. But anyway, so trying not to go off on a tangent, but what are some things that I'm looking at? So here's what I'm looking at. I am looking at this. This is what's called the Federal Reserve Board announces temporary change to its supplementary leverage ratio to ease strains in the Treasury market, resulting from the coronavirus and increasing banking organizations' ability to provide credit to households and businesses. So basically, boom, once this drop hit, then um, this was an announcement that was made, and basically that announcement allowed banks to not not have to hold as much money as they usually do. So, like for example, banks probably I think usually have to hold 5%, right? So in this case, this pretty much says is that they only had to hold 3%, which why you would see lower interest rates, why you would see lower auto rates is because you would be able to, because the banks would be able to leverage more money out to people. But what a lot of people, and there's actually Jerome Powell, who's the Fed of this, is actually going to speak more about it. But basically, what this is saying is that this ends March 31st. Well, if it ends March 31st, then that would mean that we would tighten back auto loan rates, we would tighten back mortgage rates, we would pretty much the markets would try to tell, or the Fed is trying to tell us that we're going to go a little bit more conservative. We believe we had a hell of a year in the stock market, not on the main street, which sucks. There's a lot of people making a lot of money in the stock market, but when you talk to Main Street, which are the restaurants, the small business, they have been doing well. And so I think that we're going to extend this. I really hope that we do. But if Jerome Powell doesn't come out today and talk about extending this deadline, then it will scare the markets, and we're actually seeing that today, and it started yesterday. It's because of this policy. And so, what does that mean, Nick? Well, um, I mean, it could right now it's hard to tell, but it could be a stock market crash, like kind of like what we had here. Now, the crazy thing is that this lasted like 2 months, right? So this is considered like a stock market recession crash, right? Which was 2 or 3 months. But people lost a lot of money here that were investors that were in the stock market. But there were also some good buying opportunities that if you would have bought it here at the bottom, then you probably made a lot of money, right? So when I look at it, I mean, this was a drop of almost 35% in the stock market. Let me see. Let me go back here. Yeah, about 35%, 30%, let's just say. So that would have meant like your Tesla, your Amazon stock, your single stocks would have dropped double. So like almost 60%. But if you would have bought here at the bottom, then that would have allowed you to, I mean, ever since if you would have just held on, almost profit 85%, from the S&P. But if it was like a single stock, like Amazon or Tesla or Google or something like that, then you probably profited about 160% over this time. But here's the thing is, you know, I put this on my social media, and what um, this is um, the Wall Street cheat sheet psychology of a market cycle. So I posed this question out, where do we think we are? And I'm not going to be the one to actually point where I think we are in this. I'm just going to have you kind of think, you know. So how do you, Nick? How am I supposed to think about something like that? Well, if you think about where we were, let's just think about this. Uh, I would say that we were probably right here in depression mode, anger mode, because it was such a drastic drop. But I mean, you tell me. I mean, if basically if we look at it from like I mean, if we look at the stock market just a little bit deeper, I mean, this thing looks like a rocket ship. I mean, it's just been going up for a long time, ever since actually, you know, 2008. Yeah, right here, 2009. I mean, it just has been just like on this rocket ship up, you know. And I'm not saying that it just won't continue. You know, that's great. Let's all be in it. But I'm also not naive to think that that this could also have a larger correction, you know. Um, so, anyways, my message is just be cautious out there, guys. I do think that there could be something like a recession that could occur, and I will say it could happen between April and the end of June, June 30th. Now, what would be some indications that would allow me not to think about those dates? Um, like I said, if this changes, then and it extends it, then we'll continue to probably have a hell of a summer, and we'll go from there. But I can't help but technically think that right now, my technical analysis says is that we're overbought. We're overbought right now. And even though we've been on this trend line for this so time, it's hard for me to, you know, it's hard for me to see that we're just going to continue on this rocket ship up, right? And I'm not also naive to think, and just so you guys are aware as well, I'm not into any stocks. Majority of my money has been in the Bitcoin, but I'm also not naive to think that this won't affect Bitcoin as well. You know, right now, you know, it's hard to tell what that correlation is right now. But I will put out another video on that. But I just wanted to give everybody who is in the stock market to just kind of let them know what I'm seeing. And so, you know, what would cause? Let's just say, what would cause something? So, like for example, in 2008, we saw the market go almost 2 years down, right? It just went 2 years down. And crazy enough, it was actually right below that 9-day average. Everything was just right below, and then boom, we caught the bottom there at 650. So think about it. In 2009, it was at 650, the S&P, and right now we're almost touching 4,000. So then that would have been the time to buy, and then you would have just skyrocketed back up. But you know, here's the thing: is that this one lasted 2 years. Now, what would change my mind if this wasn't a recession, but possibly a depression, which is 1 to 2 years. Now, in between this time, if it does happen, and let's just say we also go into like war or some sort of financial collapse in some way, then yeah, we could be in for a long run. But again, it's not to scare you guys, it's to prepare, because here's the thing is that if you caught the bottom of this, then you made a lot of money, right? Same thing down here. If you would have caught the bottom of this market and just continue to have invested, then you would have done very well, right? So I just want to give my technical analysis, you know, as far as being able to catch the bottom and make a lot of money, but also just prepare, you know, prepare you guys. Last thing I wanted to leave you guys with is, so one of the things that is also outside of just from the fundamentals, from a technical analysis standpoint, one of the things I'm starting to see is, so there's this trend that I'm seeing. Basically, it looks like a cup. Basically, you have a round bottom, you have a top there, you have a handle, and then you have profit. And the way you take the profit, you take a stick and then you measure that profit. So I started to notice that the S&P is forming that same pattern. So basically, if I take this brush, let me just see here. If I take a brush and then I put this round curvature right? And then I put this handle right here. And then I see the profit, right? So again, to measure the profit is you would need to take the middle of it. And then, so I'm going to put in, sorry to give you guys so many technical analysis around there, but in the profit, it says 160 pips. And basically what that is you see, so this line, this zero line would be, I'm sorry, let me see. So the zero line would be right here. This would be 100. Okay, 3,200 S&P. And the 60 would be right here, 618. So 160 pips would be like right here. So if I were to put that in here, I mean, this could also be an indicator that tells us, you know, I don't know how long it would take us to get there, right? But this would also be another indicator that would say, okay, people have made their profits right here. And then we could start to see a correction. But again, guys, I mean, you know, you do your own technical analysis. I'm just sharing with you exactly what I'm seeing in the charts. I hope that this was informative. Please continue to like, comment, follow me. You know, I really want to educate people on this, and I could be totally wrong, and that's okay. But I am taking chances, as you guys know from my first video. I either shoot for the home run or I strike out, and I will admit if I strike out or you know, and those, and then I'll give you my thoughts of, and I'll give you updates, guys, in between if things were to change. But that's currently what I'm seeing right now. Thank you, guys.